My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. It takes a special kind of stock to do well when the economy is slowing, while inflation just won't quit. I mean, typically got this weak gross domestic product number, just 1.6% growth, anemic, and a surging inflation number connected to the GDP is up 3.7%. Bad combo, which is why the Dow tumbled 375 points. S&P lost 0.46%. NASDAQ dropped 0.64%. But you got to tell you, it was much uglier at one point today. The Dow was down almost double where it went out, as we heard all day about the slower growth and higher inflation, and that meant the dreaded term stagflation. And that environment is toxic for stocks.
The house of pain.
On top of that, one of the market's greatest leaders, Meta Platforms, got crushed today. I mean, just annihilated. Not because of its earnings, which were stellar, but because it committed a huge amount of spending, most of it directed toward generative artificial intelligence. What's bad for the Meta goose, though, is good for the NVIDIA and Broadcom gander, which is up 29 points and 37 points, respectively, as they're going to get a huge chunk of capital expenditure budget. I still believe in Meta. More on that later. In the end, this decline was all about a slowing economy mixed with persistent inflation, which drove up bond yields and brought sellers out throughout the day. So you got to ask yourself, who can win in this environment? Are we done? Do we just fold up shop? No. We just have to work harder. Let's look at today's sparse winners. First, two that are right in our faces. Let's talk about Microsoft and Alphabet, both of which are flying in after-hours trading. Microsoft beat the estimates for every major line item with 17% revenue growth, which is incredible, 20% earning growth, that's looking good. Their Azure cloud business growing nicely again, much better than expected, I've got to tell you, more than 30%. Their integration of artificial intelligence seems to be helping them sell enterprise software, which is Microsoft's bread and butter. These AI workloads are incredibly strong for them, and they are seeing stability even in the PC market. Yes, it's stabilizing. A lot of stocks you can buy. If that's the case, it had been pretty awful. Nice quarter. As for Alphabet, wow, they finally did it. It was a magnificent set of numbers. No wonder the stock was so strong. Search and YouTube core businesses were much, much better than expected. Hey, they finally broke out some numbers for YouTube, and they were spectacular. AI business incredible. Google Cloud was great, growing at a 28.4% clip. It's up with the other big boys. Authorized, get this, $70 billion buyback to shrink the share count, directly boosting the earnings per share, and hallelujah, a dividend. All right, so it's only 20 cents. Doesn't matter. It's a great sign, and the market loves it. Unlike Meta, while they did say they will be investing heavily to build their AI business, they also said they'll be expanding margins as they do so, which is why Alphabet still gets credit for its great results. I haven't seen a quarter like this. I can't even recall one where they delivered on everything we wanted. It's like they listened to the show. Next, there's Merck. All right, the secret here is Keytruda. It's the most revolutionary anti-cancer drug in history. Keytruda sales came in at $6.9 billion, one quarter. That's up 24% in constant currency, which is astonishing, as Merck just keeps finding different types of cancers that can be treated by this thing. Of course, drug patents don't last forever, which is why Merck's been buying up new medicines to combat both cardio and immunological disorders. This stock, which gave you a 3% gain today, might be perfect for the current moment, given how it raised revenues, raised margins, and ensured a terrific new drug pipeline. I got to go out on a limb here a little bit, and Rob Davis is so great, the CEO, but I think they could make a lot of cancers chronic diseases that would otherwise be fatal. Fourth, you got to take a look at this Union Pacific. I mean, here's a railroad that this had been this, and now it's this. Terrific set of numbers, mainly because it's so much better run now that CEO Jim Venn is running the show. This guy started as a brakeman, by the way, 40 years ago. Don't you love that in America? Last summer, under pressure from an activist hedge fund, the board picked Venn, a protege of the late Hunter Harrison, who practiced what's known as precision scheduled railroading, PSR. This is a method of railroading that makes more money by getting the trains to run with maximum efficiency. Yes, trains on time. Even in a slower economy, Union Pacific still can deliver an excellent self-help story. Hence the 11-point rally. It was spectacular. That is the real deal. Fifth, we've been bemoaning the performance of the gold miners here versus the underlying commodity, but this morning, Newmont reminded us that not all gold companies are created equal. Last year, Newmont bought Newcrest, and I figured it'd just be one more sad sack gold deal. Almost all of them were bad. Nope, it was able to produce much more gold than expected, lower costs, and that's how you outrun the economic backdrop. Faster revenue growth and lower expenses gives you a 12% rally. 6, Royal Caribbean shut the lights out again. Maybe people are used to it because it was up a lot at the beginning of the day and started coming in, but still finished positive. It's riding one of the great waves of cruising with record bookings. So much was good here, from the return of high-yielding Chinese customers. They're back, to the fact that the repeat rate here is 30% higher than it was in 2019. There are some powerful secular themes that can trump the noxious backdrop, and travel fits the bill. Remember, Mercury Express gave us those amazing travel statistics previous Friday? Well, it's looking that Royal Caribbean's got the same great thing going. 7, speaking of resurgence of the Chinese consumer, we heard from Boston Scientific, great medical device company, that the China market's now roaring with strong double-digit growth for 7 of their 8 business units. Who would think that China's coming back for some companies? This company, by the way, is prolific. It launched 90 new products, gave you an astonishing 13% growth rate. What I like best about Boston Scientific is it's just crushing the rest of its cohort with ease. And they're doing it through pure innovation, something that can't be contained by slowing GDP growth. Now, here's one I don't talk about enough, Dover. I knew Dover as a sleepy industrial company, which means, frankly, I didn't know it at all. The new Dover's reinvented itself, moving aggressively into, get this, that some companies are so darn smart. They moved into clean energy, engineered products for the data center, aerospace, and biopharma. All 4 verticals are in insane bull market mode. I think the analysts are just now catching up to the reality, like me, that Dover's a very strong company. The order growth's terrific. The sales are coming in at the high end. And by the way, they're like not promotional and they're humble. That's a nice combo. All right, how about Carrier? Speaking of humble, we've had CEO Dave Gitlin on a bunch of times. You know, his company's located in Palm Beach. Not bad, huh? Anyway, you might think that his heating, ventilation, and air conditioning business would be hostage to the broader economy. You would be wrong. Wow, commercial HVAC was never so interesting. It's up an astounding mid-teens, thanks to large part to the need to cool down those, yes, data centers. I mean, they're putting them up, and these guys are cooling them off. Gitlin delivered 280 basis points of margin improvement. That is extraordinary. Closed on a key acquisition of Viessmann European, which dominates the heat pump business. Europe desperately needs more heat pumps to adjust to a warmer climate. They're much better for the sky. In order to pay for Viessmann, Carrier sold 3 non-core business lines. A 4th's on the way out. Puts them in a great place to be able to acquire someone, or, even better, how about a monster buyback? Caterpillar missed on revenue, so you think, well, wait a second, it must be hurting heavy machinery. No, you'd be wrong there, too. United Rentals, star of the show. Equipment rental company levered more to fleet productivity and the sale of used equipment. Both were terrific. By the way, so many people have asked me if there is an investment in the Baltimore rebuild. The answer is United Rentals. They're doing almost everything about it. I'm saving the best for last, okay? We wanted to get one, but I think they're out of it. Chipotle. Every line of Chipotle, from expenses to revenues, same-store sales to earnings, was better than expected. The reason? Demand. They have what people want. Now, how do you know that? How about because you know that Chipotle has this limited time only, I always call that LTO. Is it so hard to say limited time only? Limited time only offering of chicken al pastor that is so popular, get this, that the company's urging its associates to not order chicken dishes for themselves because there isn't enough left for the customers. That's incredible. Now, the most impressive statistic, California put through a steep minimum wage boost to $20. So Chipotle had to put through a 6 to 7% price increase to pass on the costs. Do you know the sales weren't even dented? I mean, holy cow. That's extraordinary. When we're looking for reasons to buy a stock in this environment, we want companies that generate constant self-help. Chipotle does it by improving throughput. How many people they can serve, say, every 15 minutes, which is how the way they measure it, especially at lunchtime. It just gets better and better and better. That's got nothing to do with GDP or inflation modes. And now I know how they're going to get to $4 million average unit volume because they are surging. Bottom line. That kind of self-help is the antidote to the big picture worries that I heard about all day today, which made me feel like, oh, maybe it's not worth picking stocks. That would be wrong, too, okay? I expect the bond market will be our enemy for a little bit. It's probably going to get worse. I am not even ruling out stagflation. I'm not even saying the Magnificent Seven will never ride again. I am saying this. Always, like at the end of the show, you know what I say? There's always a bull market somewhere. And even when this market's down, it gives you some pretty darn good stocks to buy.
House of pleasure.
Jonathan in California. Jonathan.
Booyah, Jim.
Booyah, Jonathan. What's up?
First time, long time.
All right. I like that.
My best friends and I are huge fans, and you've even inspired us to start a Mad Money group chat.
Get out of town. Put me in it. Put Regina Gilgan in, my executive producer, right now. She's trying to get into the group chat. She's struggling. All right, what's up?
My question is, what impact could future Fed interest rate adjustments have on the broader banking sector? And should we buy, sell, or hold J.P. Morgan?
All right, J.P. Morgan's terrific. The stock was down very big. Jamie Dimon, of course, came on, and he had some negative things to say. I got to get that guy to cheer up. I mean, he's got like what's with him? But Charlie Scharf doesn't need cheering up. That's why I suggest you buy Wells Fargo, which is the exact right bank for this environment, the one that you and get me on that chat. And get me on the chat. I'm very good. I mean, I have 2.1 million people who hate me on Twitter, but it's all right. Kevin, in my home state of New Jersey. Kevin.
Hey, yes. Hi, Mr. Cramer. How are you?
I'm good, Kevin. What are you up to? What are you on the Garden State Parkway? Where are you?
Yeah, I am, yeah. If you don't mind, yeah. I just got pulled over. Yeah. Is there still a good buy on semiconductor
Okay,
company?
I'm so glad you asked me that, because Renee Haas has told me periodically, Jim, you forget how good we are. You forget what we're doing. I'm going to throw ARM in. So I was waiting for it to get to 80 to re-recommend it. It's at 97. So, Kevin, here, what you do. I would buy a quarter of a position here and then every 5 down until it's finished. That's how I would buy it. I think ARM's great. I think Renee Haas is great. I think the data center is great, and they're in that big time. All right, companies that are generating self-help are the antidote to what's ailing this economy. And I think you need to stay on the lookout for those names while the bond market remains the enemy. How about that Chipotle? Don't order the chicken because you got to save something for guys like me with Alpha Store. But why don't they, the barbacoa? It's supposed to be very good. Mad Money tonight. Tractor Supply was a glimmer of green in today's ugly tape. So what stood out in the company's quarterly report? Let's talk to Hal Lawton. Then from trash to treasure, could WM be a winner for your portfolio? Don't miss my post-earnings exclusive. And there's no Tractor Supply without a tractor. So why don't we go and speak to one of the largest in space, AGCO, to see how they stand. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.